Formula One isn't really a sport Americans are too involved in. Currently, there's only one American team on the F1 grid. That is all set to change in 2026 when General Motors enters F1. They will race with their Cadillac brand, which will surely attract more Americans to the sport. While fans may surely be happy, let's find out if investors share the same sentiment. Before we look at some charts, let's look at their most recent 10K. We know that many car brands are struggling in today's economy. What's important to point out here is that the company is selling more cars in all regions of their sales mix. They cite an increase in sales of crossover cars and pickup trucks. When looking at their balance sheet, an area of interest is their GM financial receivables. Their allowance for these receivables grew slightly year over year. A larger allowance could indicate that their loan quality is low and that they expect a higher amount of defaults or delinquencies, which isn't the case. Their chart isn't the most attractive thing in the world. It looks like since 1985, investors have sometimes thought the stock was undervalued, whereas other times the stock has been sold to the cost of a quarter. An interesting level for the stock is the $43 zone. We can see how in the past years it has acted as a resistance. Now that we are above the zone, it may begin to act as a support. This would be known as a break and retest. Areas of caution arise around the $60 to $70 zone. Above 70, it wouldn't be unreasonable to assume that the stock would go back to test the $94 zone.